Very good morning to you, and welcome to Core Finance. Today I've got a COO interview, and my guest is Bill Higgs, CEO of Genel Energy. Good morning, Bill.
Good morning,
Great
Mark.
to see you.
Good to see you too.
Great to see you. Welcome to Core Finance. I'd love you to give us an overview. Some people may not know too much about Genel, and obviously plenty of people will want to know more detail, but an overview of Genel for us. It would be great to start
Yeah,
off with.
sure. Genel is a London-listed oil and gas producer, listed on the main market, and currently has a market cap of just under £500 million. We produce slightly more than 30,000 barrels a day of production, highly cash generative and low cost production that's enabled us to deliver $142 million of cash flow last year. And that strong balance sheet that we've results from our production assets enables us to make the most of our opportunities in our portfolio, which includes 2.5 billion barrels of contingent resources, the main assets of which are our Bina Bawi and Miran gas assets in Kurdistan.
Excellent. Just to get one thing out of the way, because historically, Genel is probably before your time as well, Genel, but historically, potential investors had worried about the political situation, the war, and more importantly, where you are in terms of getting paid and so on. We'll come back to the payments a bit later on, but things are a lot better on the political front now.
Yeah, I've been with the company for 4 months, and obviously it's one of the things that you look at before joining a new company is what is the situation like for their assets and operations, and with predominantly having operations in the Kurdistan region of Iraq, it's something you look at, and I think it's something that everybody's aware of.
Yeah.
But the reality on the ground is that we've reliably produced and exported crude from Kurdistan for over 10 years now, having exported nearly 500 million barrels of crude from our 2 flagship assets there.
Yeah.
So very uninterrupted in spite of the turmoil that's happened within the region.
Excellent. I think now what we'd like to do is talk about the finances side of it before we get onto the assets in detail. You've mentioned cash flow and the debt and so on. So, quick word on the cash flow. And I noticed that you recently had a bit of a restructuring of your debt position
Yes.
to make it in a more attractive and more efficient. Is that right?
Yes. So if you go back and look at 2017, I think there's a landmark deal for the company was a solution to the receivable settlement agreement. So this was an outstanding receivables from selling our crude oil to the Kurdistan regional government. And that outstanding receivables was converted into a forward cash flow against our Torquay PSC. And that has been booked in our 2017 accounts as being worth $425 million, and on an incremental basis delivers about $10 million a month of additional cash flow to the business. So that was helped underpin the overall asset performance in 2017, the $142 million of cash flow that has enabled us to write down or buy back some debt and actually refinance the debt at the end of the year to such a position that we've pushed the debt out to the end of 2022.
Yep.
And we're now in a position where also obviously the cost of that debt on an annual basis, the interest costs have come down substantially, more than 40%. And we're also in a position where the balance sheet sits with just over $100 million or so of net debt, with a likelihood that by the end of next year we could even be cash positive.
Yeah.
So a very strong balance sheet to be going into 2018.
Excellent. And your receivables problem is sort of disappearing with those regular payments.
That's right.
Is
yes.
disappearing as well.
Yeah, exactly. I mean, we've been paid for 30 consecutive months, and we've been paid for the first 6 months of the receivables deal. It's all part of the same. It carries the same risk as our payments. And I think importantly, in spite of the challenges that have been obviously in the region and for the Kurdistan regional government, the Kurdistan government wants to support future investment, and it's a virtuous circle in many ways.
It's in both your interests to make it work.
Exactly. Yeah.
Right, we've done all those bits which want to get that out of the way first, because now I want to talk about the assets in a bit more detail.
Yes.
So why don't you run me through? We got Torquay, Peshkabir, Tak Tak, and then
Yeah.
the African assets. So why don't we run through
Yeah,
some
sure.
detail?
Yeah, so if you look at look at the business again today, highly cash generative oil business, more than 30,000 barrels a day of production in the Kurdistan region of Iraq. That's based against two PSCs. The one that's probably the most well known would be Tak Tak. And I would, I think a key thing here is that it is a cash generative asset in spite of the history that the asset's gone through. It's produced more than 210 million barrels of crude, so it's been a good asset from that point of view. The strategy now is very simply to take a look at how we maintain that cash generative status. We've managed to arrest the decline last year, and we've got some infill opportunities that have come as part of our drilling program last year, where we drilled a well on the flank of the field and found more hydrocarbons more deeply than we had expected. So that's opened up opened up the opportunity for infill drilling, and we're currently putting together the plans to restart drilling at Tak Tak in the latter half of this year. So that's good. It's a good position to be in. Again, it's just generate cash.
Tak Tak had been a problem sort of last year, unexpected problem. The market was concerned that it would go wrong, but in fact, you're beginning to pick it up.
Yeah, that's right.
With the well drill.
Yeah, stabilise the production, stabilise the reserves. So we had a slight positive add on 2P and a stronger positive add at approved level. So it feels like we've got that asset under control. These assets are fractured carbonates, which are notoriously difficult to predict. So as a consequence, you've got to pay a bit of attention to them, but we feel like we're in a good place with Tak Tak. And then the Torquay PSC has two main fields in it. There's the Torquay field itself, which has been a reliable producer. It's produced over 200 million barrels of crude to date. It's producing, it's averaged more than 95,000 barrels a day last year. The asset as a whole produced nearly 110,000 barrels a day. So very, very strong cash generative performance, and the reserves there continue to be very strong. And then we have the sort of exciting news at Peshkabir.
Yeah, now this is very exciting.
Yeah, it is. We drilled 2 wells on Peshkabir last year that proved up the Peshkabir anticline. And not only from a reserves point of view, moving to a 2P in the field of 75 million barrels, but also from a productivity point of view. We've got 2 wells essentially producing over 15,000 barrels a day. So they are very, very, very cash generative barrels and investments, and as a consequence, we have a lot of infill opportunity drillings and appraisal opportunities at Peshkabir. So we're going to be drilling 6 wells this year along the anticline. They're very attractive investments.
Yeah, absolutely.
For every dollar we invest, we make about $6 or $7 in return. And the payback on all of our assets, capital that we put in is we're normally getting that capital investment back within 6 months in terms of the PSC. So you move to making returns very, very quickly, which is great. And we'll have that structure drilled up by the end of the year, which we'll see that reflected again in additional performance and in reserves. The operator's goal is to try to get Peshkabir to 30,000 barrels a day by the summer.
That'd be pretty good, wouldn't it?
It would be very good. Yeah, that's right. Yeah, there's a few challenges there, but that's okay.
Well, given that, if you look at my numbers sort of back a year or 18 months ago, I didn't even have Peshkabir in there.
Yes,
at all.
Yes. So if you look at the short term driver of growth for the business, it's at Peshkabir.
Yeah.
And so one of the things we focus very much on as a management team is disciplined capital allocation and allocating our capital to the production assets. More than 75% of our capital is going to production to generate cash, and therefore we've got what I'd call healthy competition within the portfolio today. To attract capital, so it's very much getting drawn to Peshkabir, and it makes you make choices, which are appropriate choices to make.
Yeah, well, you need them.
So it's good.
Now we've got Bina Bawi and Moran talking about looking at things in a different from a different angle.
Yes,
3 or 4 years ago, I would have had these in as the long-term producers of gas. The delivery probably for Genel in 2, 3, 4 years' time. And now I hear we've got some potential light oil into the bargain.
Yes.
So why don't we have a look at these assets in a bit of detail?
Yeah. So the key thing here is that we've got very large gas assets in Bina Bawi and Miran. It's over 15 TCF of certified of gas resources there, which comes with about 140 million barrels of associated condensate, which belongs to the upstream business. So there's great assets to have, and we've been, I think, very successful again in 2017 of moving those assets forwards in a commercially sensible way, in the sense that we've got the PSC resolved for a gas development as well as oil developments, which we'll come back to. We've got our gas lifting agreements signed for the gas projects. That there's a buyer in Turkey who wants to take the gas. So but it's a big gas value chain play. It's
so you've got the financing in place for and what's the timing on the gas?
The tricky thing is that when we look at it from an upstream point of view, which is the bit that we own, it's a remarkably low risk project. We essentially have got no volume or price risk in the asset today, which is is amazing for an upstream asset, because we've got more than enough gas in the 1C resources to satisfy the gas lifting agreement. So it's a 5 TCF gas project, and we already know what the sales price is to the Kurdistan regional government. So the bit of work that needs to be done is the financing and construction of a midstream gas processing plant. And that's going to be built on the concept of a build, own, operate tariff model.
Right.
And so the Kurdistan regional government are talking to companies that can provide that sort of structure and engineering for that development. And that's the critical path for the project. It takes
and that's
about
3 years.
Yeah, I would say it takes about 36 to 40 months for the midstream project to be built. We could probably deliver the upstream in somewhere closer to 26 months. So the next real milestone is for us to get to that FID on the midstream gas project.
Yeah.
And we in the short term, that means that Genel can hold the gas assets as a low cost option.
Yeah.
We don't need to sell the asset today. It's not going to cost us very much more to take it through to FID. And at that point is always a much better place to sell the asset to maximise shareholder
value. And the highly profitable wet stuff comes as sort of as a bonus.
Yeah. So if you look at the so that is was the new news in many ways when we did our CPR earlier in the year, was that we've got 30 to 35 million barrels of light oil, particularly sitting at Bina Bawi. So it's a 44 to 47 API crude. We're about 30 kilometres from TAC infrastructure, so not very far away from our own infrastructure.
Yeah.
And it's been tested. There was a well drilled there that tested the oil at over 3,500 barrels of oil per day. So we know that it's very mobile.
Yeah.
And in the PSC that's been negotiated, we have a combined favourable terms because of the fact it's considered to be a combined development.
Yeah,
so we combine the gas and oil together.
Yeah.
I think the key thing from a value proposition point of view is that means that when we reach FID on the gas project today, we could move ahead with the FID on the oil project.
Yeah.
While it might be 36 to 40 months until first gas, I can probably get oil up and running in 6 months.
I think that FID will be the simplest decision you've ever made.
Well, it's certainly well, and it's good. As I say, good to have that flexibility in the portfolio to be able to see that there's another short-term, highly valuable cash generative piece to the puzzle.
Excellent. Now, I know you've also got assets still in Africa. You've got Somaliland and Morocco.
Yes.
How are they fitting into the jigsaw at the moment?
Yeah, I think again, if you go back and take a look at 2017 and look at what we've done across the portfolio in terms of maximising shareholder value, I think the commercial deals that we've struck last year were excellent.
Yeah.
Whether it be the receivable settlement agreement in Kurdistan, or the negotiation with the Moroccan government to convert a well commitment into a seismic program, which is the right thing to do for the asset. So therefore, it's the right thing to do for the Moroccan government as well as ourselves. And we're moving ahead with a seismic acquisition program later this year.
Yeah.
Or in the negotiations with the Somaliland government on getting them to acquire the 2D seismic program that we shot last year, and for us to purchase it from them so that we can move ahead. They were all sensible ways to move the assets forwards. And I think of those, Somaliland is the one that we're most excited by. It feels a bit like Kazakhstan. Kazakhstan feels a bit like Kurdistan 15 years ago.
Yeah.
And it's underexplored basins, Mesozoic basins that are akin to the oil basins in Yemen. Yeah. And really hasn't been explored. We shot 3,000.
People have been reluctant to get into that part of the world.
Well, it's a discontinuity, isn't it? There's a technical discontinuity. These basins haven't been explored for decades. It's the first seismic shot there in over 25 years. Yeah. And so we're leading the pack and feel like we've got good position, and we'll build our prospect inventory this year once we get the processed seismic back, and then we'll take a look at what the best strategy for value creation with Somaliland is. But quite exciting. It's nice to have it in the portfolio.
Yeah, absolutely. I always ask about shareholders, and particularly in your case, you've got an interesting shareholder list. You've got a cornerstone shareholder. You've got some very decent institutional shareholders, some of whom all the way back from the float, and you're getting a sort of growing band of retail holders. How does the shareholder list look like?
I mean, it feels like a good place to be. As you say, we've got some good cornerstone investors, which are both institutional and independent regional players. Who obviously like the story. I think it's always good to be in a position where your share price has been growing over the last 2 years. We're probably at nearly
I'll come back to the share price at the end, I think, but it's looking good.
And you say I think there's been a turnover in the register in the last few years, which has enabled us to have quite a lot of support across the value chain. So retail as well as other institutions coming in.
The retail has added an interesting bit to the free float, because I remember when I looked at the company 2 or 3 years ago, the worry was that because you had a big cornerstone and you had institutional investors who've been there since the float and seen the share price up at 10 quid and so on, they weren't going to move. But now there's more of a free float. We've seen a decent increase in the share price, and I'll come back to that later and just ask you how you think it's going. It is, as you say, at a recent high, and the chart looks great. And you've actually broken out of the chart from that front. But the other thing I wanted to ask you about was how the board is made up, because everyone who knows Genel well enough knows that in the last year or so the makeup of the board has changed dramatically. Obviously, you've come on board in the senior position. Got a new chairman in Steve White. What's the form on the management, on the board?
I think it feels. I mean, it's part of the reason why I joined, say 4 months ago, was it felt like the company was in a turnaround story, and so we've got some new chairman, new board members, new management team, predominantly with Esther and myself coming on to the management team, with Murat and Pars. Retaining that strong link back to our Kurdistan roots. So
will it affect strategy at all now that you think things are changing a bit?
I think what affects strategy is when you move from survival mode into growth mode, doesn't it?
Yeah.
And again, you look at the receivable settlement agreement and our cash generation last year, the strength of the balance sheet, the refinancing of the bond. It's put us in a position where we can start talking about disciplined capital allocation, about continuing to grow our cash generation, and then how do we show continued discipline to generate growth.
And you've got a good portfolio of long value achieving assets. Are you in a position where you might be considering acquisitions at the moment?
Yeah, well, I think the key thing is about again focusing on that discipline and saying that we've got the balance sheet strength and the cash generation to look to grow, and therefore does an asset, does that capital, is it attracted best to an asset that's in the portfolio, or is it attracted better to another asset that isn't in the portfolio? And being able to make those choices is a good choice to be able to make.
Excellent. Well, 20 minutes disappears in a flash, as I always say, and we're nearly at the end of the 20 minutes, I'm afraid, Bill. But I never let anyone go without asking them the sort of final question, the vision question for where you'd like to see Genel in a year or so's time. A lot has changed, and you've got a lot of things going on, which you very kindly told us about. Where do you expect would like to see Genel in 12 months' time?
Yeah, it's great. I mean, as I say, being in the position where we are, where we've got such a strong balance sheet and a very cash generative business, and some very interesting options within the portfolio that we can see clear paths to moving those along either from a short-term cash generation in our portfolio or from longer-term options to, ultimately we see a business that in 12 months' time will be generating even more shareholder value than it is today.
And the shares are at a recent high, but with lots of upside, I would contend.
Yeah, we believe so.
Excellent. Thank you very much, Bill. It's been a great pleasure to interview and talk to Bill Higgs, the COO of Genel Energy. We very much look forward to seeing you again on Core Finance. Thank you very much for watching, and see you next time.